Joseph Oloyede is an analyst at Tech Cabal Insights and joins us for this conversation. Hi, Joseph. Good afternoon. Welcome to the program.
Hi, good afternoon. Hi, can you hear me?
Yes, I can hear you, Joseph. So we saw that the volume fell, even though the value increased. What does that tell us?
So pretty much what we are seeing is what I call like a flight to quality or flight to safety, which both can like coexist. And it's also important to note that like the African startup ecosystem is an asset class. Venture capital investors are beginning to like treat the space more like private equity, investing in companies that have like a solid cash flow and a clear footpath to exit, especially since like exit has been scarce in the African tech ecosystem. The reason why we are seeing like low number of deals is pretty much that investors are favoring growth to like late stage companies. So I think until we begin to like see more early stage startups that have like a clear footpath to exit to investors, we'll continue to see this shift.
So we hear that climate tech is taking over. How correct is that? And what exactly does that look like in the business world?
So I think on the climate tech side, this is pretty much not the first time that climate tech is outpacing like fintech. I think it's also important to know that climate tech cut across like various sectors. According to our methodology at Tech Cabal Insights, climate tech cut across like energy and water, logistics and transport, waste management, agriculture and food, and a few other sectors within climate tech, which like raised combined $686 million in the first half of 2026, which like fintech raised like $486 million. And why this shift is happening is pretty much because investors are, increasingly favoring vertical integrated companies that have demonstrated like a long-term commitment to build local value chain and also like upskill talent. So what's pretty much happening is strong unit economics and governance remain like the foundation for long-term investment. So that's pretty much why like this is happening.
And then we hear that about or more than $1.7 billion have been raised by Africa-focused fund managers, but this is yet to be deployed. What's the reason behind that?
So the way funds are pretty much structured is that investors like whenever like they raise funds, it's yet to be deployed. There are pretty much capitals that are yet to be deployed. And I think the good news about like this undeployed capital, which is over $1.7 billion, is that this funding will be disbursed across all sectors, but like a relatively large chunk of that will be allocated to like climate energy. And I think one of the things we did on our State of Tech in Africa H1 report is to map out who are these fund managers and what specific sectors are they looking to like deploy this capital into.
Yeah, so there's unused money out there. It's just for the startups to be able to attract it to their corner, correct?
Yes, pretty much, yes. So it's pretty much on undeployed capital that was recently raised by fund managers.
Okay. All right, Joseph Oloyede, analyst at Tech Cabal Insights. Thank you for your time.